Today we will talk about family business legacy and retirement strategies. Specifically, I will answer a question from Anthony, a business owner and one of our YouTube subscribers, who wants to know about employee stock ownership plan, also known as ESOP. Welcome to the Financial Legacy Podcast. I'm your host, Maria Ellis. On every episode, I will bring you my perspective and the perspective of my guests on financial planning and financial legacy issues. Here at the Financial Legacy Podcast, we are changing lives one person at a time by creating your own financial plan and financial legacy. To help you create and enjoy your financial success, connect with us at financiallegacy.live for your complimentary consultation. In response to the question from Anthony, a business owner and one of our YouTube subscribers, who after a long time of building his company from the ground up, he must decide on a business exit strategy that both protects his lifetime investment and as well as allows him to have to continue a successful life, to continue into his future, right? So as you may recall in my book, Family Business Legacy Plan, I taught you business exit strategies for you and your family so that you don't have to pay too much money in taxes, right? Also, we have been talking about the various exit strategies that business owners can consider. So as a reminder, when you're considering an exit strategy, when you're getting ready to retire, you as the business owner may want to consider a merger or an acquisition, right? And these are transactions in which the ownership of your company is transferred to other consolidated and is consolidated with other entities. So that's a merger and acquisition. You could also sell your business to a partner, to a family member, to a long-term employee, or you may want to consider a family business succession plan, right? So those are all alternatives. For instance, if your company has sales over 50 million and has growth potential, you can actually take your company public through what is called the initial public offering, right? So if your company is a small or a medium-sized company, an employee stock ownership plan could be a good exit strategy. And that's today's topic based on the requests from Anthony. So what is it? What is an employee stock ownership plan? It is a popular alternative that involves the sale of the business. An ESOP, or what is called an employee stock ownership plan, is different from the traditional exit strategies involving the sale of the business to a retirement trust that ultimately results in the trust for the benefit of the employees actually owning the stock in the business. So an ESOP, right, which is an employee stock ownership plan, can assist the business owner in several ways, including estate planning, tax savings, and retirement planning. Choosing an ESOP allows small and medium-sized companies to create a plan for dual legacy, that is, one for the family and one for their employees. So it provides a business owner with an opportunity to diversify their wealth in a tax-advantaged manner. At the same time, it creates a financial incentive for the company employees to expand and increase the profitability of the business by allocating shares held in the ESOP to individual employees, right? So employees now they become owners of the business, so they are much more motivated, they are much more creative, they increase sales, and consequently they increase profitability of the company. So an employee stock ownership plan provides substantial tax advantage whether you're a small company with an S corporation or a C corporation. So you may recall that a C corporation is a corporation that is taxed separate from its owner. So in a sense, it's double taxation because as the owner, you pay taxes through the C corporation and you also pay taxes individually. So a C corporation is different from an S corporation, which is generally not taxed. So there's only one tax when you have an S corporation. So under the certain circumstances, the C corporation, the owner can benefit from paying no capital gains when you actually do an ESOP. Also, the company benefits because an ESOP is permitted under the Employee Retirement Income Security Act of 1974, known as ERISA, to borrow money from the company to finance the purchase of the outstanding shares. So that's a huge tax advantage right there. ESOP allows companies to repay the debt in pre-tax dollars, effectively providing the company with tax deductions equal to the purchase of the ESOP shares. So again, you could see there the tax advantages, right, for everybody involved. If your business is an S corporation, provided that 100% owned by the ESOP, the company will not pay any federal or state taxes, that of course depending on the jurisdiction, right? Because an ESOP trust is a tax-exempt entity. If the business is partially owned by the ESOP, a proportionate share of the company earnings will not be subject to tax income. So in closing, given the tax advantages, the liquidity, the incentives, and the overall flexibility that comes with choosing an employee stock ownership plan, you owe it to yourself to talk with your attorney, your CPA, and see if an employee stock ownership plan will work for you. I would like to thank you for tuning in to the Financial Legacy Podcast. Here with me, Maria Ellis. To learn more about how to work with me, go to financiallegacy.live. Here on the Financial Legacy Podcast, we're changing lives one person at a time. To help you create and enjoy your financial success, connect with us at financiallegacy.live for your complimentary consultation. Thank you.
In providing answers, neither Maria Ellis nor the Financial Legacy Podcast and guest speakers are acting as certified financial planners, advisors, certified financial analysts, CPAs, economists, accountants, or lawyers. Neither Maria Ellis or the Financial Legacy Podcast and guest speakers make any recommendations as to any specific securities or investments. All content is for informational and general purposes only and does not constitute as financial or legal advice. You should consult your own tax, legal, and financial advisors regarding your particular situation. Neither Maria Ellis nor Financial Legacy Podcast and guest speakers accept any responsibility for any loss that may arise from accessing or reliance from any information in this podcast. And to the extent permitted by law, we exclude all liabilities for any loss or damages derived directly or indirectly arising from the use of the information.